Hi, everyone. Thanks for joining us again on another Finance Fireside Chat brought to you by FutureView Systems. We have a great episode for you today. We're actually joined here by Nick, and Nick is works in finance at TRG Screen. Nick, thanks for joining us on the show.
Yeah, Matt, thanks for having me.
Yeah, absolutely. I'd love to give the audience, before we dive into all things corporate finance and FP&A, would love to get a little maybe background on your career and kind of where it led you here to TRG Screen.
Yeah, sure. So like you said, I currently lead FP&A at a New York-based software company called TRG Screen. We help financial services and professional services firms manage their market data subscription costs. So I've been here for a little over 4 months now. Prior to that, I spent 6.5 years at another New York-based software company in the marketing technology ecosystem called Wonderkind, and was with that company as we scaled from 50 million of revenue north of 150 million of revenue. And then prior to that, I spent 3 years in investment banking at the beginning of my career, but I guess you could say I've spent most of my career in the mid-market software space.
I know you also have a little bit of a background in investment banking, so you kind of seen both sides of the landscape of financial services and corporate finance. Would love to maybe just between those two, sometimes people blend financial services and corporate finance into one, but maybe you could start with kind of talking about the nuances and differences between the value add within corporate finance and FP&A versus maybe a traditional finance services that people might be considering or thinking of.
Yeah, I mean, I think obviously the main difference is just in the width versus depth aspects of both. I think when you're in financial services, you have a lot more width, and you're maybe working across multiple different clients and multiple different industries and different client engagements, but much more of a surface level understanding and engagement as part of that work. Whereas I think the draw for me and why I wanted to switch over to the operating side, and I think what you get in more of a corporate finance or in-house FP&A role is much deeper understanding of the business, much more heavily involved in more complex, internal operations, because at the end of the day, you're working for one company and you're trying to solve, problems inherent to that business and that business alone. And so I think it just leads to, I think, a lot higher intimacy of the business model and how to translate maybe financial metrics to ultimately company performance.
Yeah, absolutely. Now, I know you have an athletic background. What's a day in the life for Nick like? Is it a 5 a.m. start with a 5-mile run around the blocks and then getting everything ready to go into the office and start planning and forecasting, or what's a day in the life like for you in FP&A?
Yeah, well, I'm a new dad, so I've got a 6-month-old at home that has been an adjustment, and I think I've had to make some tweaks to the daily schedule and become more flexible. But have really enjoyed becoming a father and going through that with my wife. But yeah, I mean, a typical day, try to go to the gym in the mornings, maybe 3 days a week. I find that if I don't go in the morning, it's hard for me to make it up elsewhere in the day. So try to do that, get something done for me first thing in the morning, and then we're hybrid from a company perspective, but we do have a New York office that I tend to utilize 3 to 4 days a week. And yeah, I guess we can get more into the day-to-day of the role, but every day is a little different depending on kind of where we are in the calendar and what's important for the company at that particular point in time. Obviously, I'm pretty new to my role, so I think a lot of the last couple months for me specifically has been focused on onboarding and maybe laying the groundwork and putting in place some of the foundational pieces that I think will hopefully bear fruit over the next couple months and years. But yeah, that's a bit about my personal life outside of work.
Yeah, and I can relate, similar kind of timelines in life. Also, I have a 5-month-old son as well myself, our first, and so as I
There we
said,
go. Look at us.
it's an adjustment to say the least. But it's always great to have a place that you work and love working at to really go from baby time to work time, and it's a great shift going back and forth. I wanted to talk a little bit about kind of the value that FP&A can add, especially for if we were to characterize kind of like the companies that you've been working with, these sort of mid-market growth companies, call them, everybody's got a whole different definition, I feel like, of mid-market, but let's say the bell curve represents, call it 10 to 20 million to a couple hundred million, that kind of sweet spot, if you will, of the mid-market. And so in that regard, FP&A really seems to play a vital role for those organizations that are probably either rapidly growing or have at least some sort of roadmap for their growth. And obviously they want to balance that with profitability. But can you talk a little bit about the value that FP&A can provide at those companies?
Yeah, I think you touched on it a little bit, but I think what makes companies in that range of mid-market growth, being companies that could benefit from FP&A and perhaps are ready for FP&A is probably it's right around the time where there starts to be more of a predictable growth model. So it's if you're north of 20 million of revenue, you've eclipsed the point where you maybe just have a couple sales reps selling something, and so there's some amount of investment behind go-to-market and behind product development. You're probably starting to have data, whether it's financial data or operational data, but typically without someone full-time dedicated to FP&A, there's a lot of data with maybe little insight attached to it, and so companies maybe don't know what to do with some of the data and how to use data to make informed decisions. So I think a lot of the value that FP&A can bring to mid-market companies is just around kind of those two things, which I would call just greater visibility and then greater predictability, to help companies answer questions like, if we were to do X, Y, and Z, what happens to our, financial performance? Or if we want to produce X, Y, Z outcome, what are the levers that we have to think about putting in place to get there? And how do we effectively model some of those decisions, so we're making the right bets at the end of the day? So I think it really just comes down to those two things, where I think the value is in heightened visibility into performance, and then hopefully once the proper pieces are in place, greater predictability and scalability.
And you mentioned data and the need to manage data, especially an FP&A role in a growing company. Can you talk a little bit about, when you think about managing data, and maybe you think about on the lower end of an organization's growth curve, they're probably utilizing Excel heavily. They're probably entrenched in manual processes just to get it to work, right? Just to get a reporting package together, just to get some sort of forecast that's planned out for at least whether it's quarterly or even an annual budget. And so maybe talk about that need for, there's this data management need and integration play that's entrenched in finance and FP&A, but also the tooling that goes along with it to really unlock that value.
Yeah, I mean, I think you hit on a lot of it there, but I think data scalability and data pipelines and how you get from question to answer using data is obviously going to be reliant on the systems and processes that you put in place. I think ultimately the goal of any performing finance function is that type of data wrangling work should really take as little time as possible, and it should be as automated and kind of instantaneous to get the right data, so that nobody is having to intervene or manipulate data, because ultimately what you're trying to do is answer questions with data. So the less time you spend manipulating data and worrying about where you're pulling data from, the more time you can spend on value added analysis and conversations that might be sparked by that data that hopefully you can put in place in a streamlined and automated fashion.
Yeah, absolutely. That's well said. And I want to talk about value a little bit more. And we talk about where value is derived. When we consider, if you're a PE-backed company or you have some sort of sponsor or investor group, can you talk about the value that FP&A can also provide there, and really the need for FP&A once those sponsors come into play?
So I think there's a lot of very smart private equity investors out there. We're fortunate enough to have one in Vista Equity Partners as our primary sponsor. And I think anytime that they're going to invest in a business, they obviously have a plan and a value creation thesis for what that business can and should look like on a typical hold period for them, and they'll do their own modeling and financial analysis to support that investment, and then ultimately monitor the business against that roadmap throughout the hold period. And I think where FP&A can be in-house FP&A can be complementary to that is in translating, what might be a more higher level view of the business into a more granular and distributed financial plan, and making sure that the internal stakeholders of a business are engaged in the financial roadmap of the company, and that long-term plan that the sponsor may have is translated into hopefully an in-house long-term plan, and then ultimately an annual planning cycle each year that ladders up to where the business should be at a different point in that hold period. And then there's the right distributed planning that goes on within the organization to support that, so everyone within the company is bought in on the financial plan of the business.
You touched on that distributed plan and that annual budget process, if you will. There's a lot of methodologies out there for how you should maybe best approach budgets. We've seen with FutureView Systems and our solutions that many companies can go from 2 to 3 months of their budget process timeline to 2 to 3 weeks. And so I'm curious on your end, what do you think is the best way to approach an annual budget that you're going to be managing with, those department heads and the board, and trying to make sure that everybody's aligned, and where do you go from taking maybe, like as you said, maybe there's a number in mind that the sponsor is interested in, but you also have, the boots on the ground, if you will, from a department perspective, whether that's on the go-to-market or development or operations side. How do you balance all of that as you manage your budgeting process?
Yeah, it's a great question. I think it's one that as finance professionals we've all grappled with, and I've definitely had planning cycles that have gone smooth and some that haven't gone as smooth. I think what I've learned is planning, and annual planning specifically, tends to go a lot better when you have an up-to-date long-term forecast model that you're updating and rolling forward throughout the year, and you are kind of paying attention to that long-term view of the business with the right stakeholders, whether that's the executive team and the board, or some combination of those stakeholders. And so hopefully, in July or August or whenever it is, kind of maybe 2 to 3 months before you're going to really kick off your annual planning cycle, I think you can do yourself a big favor by using that model to take a higher level view of what you want the next year to look like. And hopefully it's just an output out of that model. From given we're a software business, and I've spent my time in software businesses, I think the next critical piece to a planning cycle to get right is going through a product roadmap planning exercise and really understanding, what are the investments you're going to make to maintain and upgrade your existing product suite over the next 12 to 18 months? What new bets do you want to make across your product portfolio that you think can drive growth not only next year but in future years? And what are the different investment size thresholds to support that roadmap, and what are some of the trade-offs and decisions that you want to make as part of that? And then I think next comes go-to-market planning, and this all assumes you've kind of locked in on the high-level operating plan for the next year in terms of the broad shape of the P&L. But then once you start working through more of a bottoms-up planning motion, it's thinking through go-to-market investments and how do you resource your sales and marketing department to go out and grow and sell new business next year, and then how do you resource capacity to support existing customers next year as well. And I think those conversations are all things that you need to be doing with department heads and collecting input from them, and where do they want to make investments across their teams, what's important to them in terms of priorities for their own organizations that support company goals next year. So I think the hope in going through that process in terms of at the start aligning on the overall context and shape of the P&L, and then working through different bottoms up planning motions. The hope is you come out the other side, you've probably made some trade-offs in your bottoms up planning to align back to the high level plan that you started with. But I think the more you can start with an end goal in mind ahead of your planning, it makes a lot of that bottoms up planning easier. But it's very important to have that bottoms up planning motion so everyone feels bought into the plan that you're going to have next year. I think nobody wants to receive an annual budget strictly from finance with no involvement. That's a recipe for disaster. So I think that's why, even if you can get the plan done, in a couple weeks, it probably makes sense to spend at least, a month or two on your planning cycles, just so there is the right level of alignment and buy-in. But obviously systems and processes can make that go a lot smoother, and most of the value can be derived from those conversations as opposed to painful spreadsheet modeling.
So if I were to maybe paraphrase, it sounds like from a budgeting workflow perspective, you kind of have this thought of a hybrid approach where you sort of take the top down from some of the targets that maybe the executives and maybe it's the co-founders and maybe it's the board, and they have their input on what they think at the top line of maybe the P&L, but then you're also getting that input on the lower end from the bottom up, and so you're kind of marrying the two in this hybrid approach, and that maybe allows for not just alignment but accountability across the team, right?
Yeah, exactly.
One of the things you talked about was this idea of a roadmap based on maybe there's new products that are being launched, and this idea of the success and the projections of those new product launches. Can you talk a little bit about sort of the scenario planning piece of FP&A and how that factors in, especially when you're talking about maybe a relatively unknown thing that you're bringing to market or you're going to build out and bring to market that otherwise doesn't have a whole lot of assumptions to go off of?
I'll say it's a hard challenge. I think modeling return on investment for product development investments is historically a tricky thing to model. But I think you're right. I think what's important is trying to appropriately capture the scenarios and be able to sensitize the impact of those. So it's not so much about getting it perfectly right in terms of, hey, this product development investment that we want to make will generate X million in revenue. It's more understanding the scenario set and, what do you have to believe to be true in order for it to be a good outcome, and where is the breaking point or sort of the hurdle rate for some of those investments, and what is the range of outcomes that different bets could produce. And I think, like you said, I think you get a lot of those answers through scenario planning and scenario analysis on top of sort of your base case budgeting.
And you talked about this kind of revenue planning and forecasting out. Can you talk about how perhaps you might need to look at things from a segmentation level of your cohorts for maybe your current customers as well as future, maybe it's a cross-selling campaign that you'll be launching for that next quarter or next year. Perhaps there's a new revenue model that maybe it's a mix of product and service, or anything in that regard from a metrics and KPI standpoint as well that you would want to hit on.
So yeah, I think in terms of revenue planning, also kind of a tricky subject, but I think you're trying to balance.
FP&A is pretty tricky. I think that's what we're trying. This is not an easy world, right?
Yeah, it's not rocket science, but yeah, it has some nuance. But I think you're trying to balance two kind of competing priorities, where I think on the one hand, there's sort of this maxim that the more straightforward and simple and intuitive you can make your revenue model, I think the easier it is to drive, alignment and understanding of the financial performance of the company. And so I think on the one hand, you want to keep things as simple as possible, so you're not getting lost in the details or the weeds, and you have have a good map of your business from a revenue standpoint. But on the other hand, I think you need to segment, and you need to introduce dimensionality that increases predictability of your revenue plan. And so if you have SMB customers, those are going to behave very differently than true enterprise customers if you have both. And so you need to think about the ways that you do need to segment, so you're not cobbling together revenue streams that happen to be very different. And so I think some of the common ones, obviously if you have different revenue models or charge models, you need to think about breaking those out, which hopefully is done through your financial statements anyway. But then I think you also need to think about your org chart and kind of how ownership and responsibility of different outcomes is distributed throughout your organization. So, if you have an international line of business that's managed by one person that's different than your North American business, I think it's important to plan that appropriately so you can cascade ownership of an ultimate revenue number throughout your company. And then, I think you also touched on, and maybe I just mentioned it, but thinking through the ways that segmentation and dimensionality can increase your prediction of the future through your revenue planning, I think is important. So on the one hand, you want to be cognizant of creating a plan that everybody's invested in, but you also want to create a plan that hopefully is as accurate a representation of future performance as possible. And so I call that piece like you're trying to get closest to the pin almost with how you revenue plan. And that's where I think, being thoughtful about how you segment and split your business is important. So long as you don't get too carried away with it. I think there's probably some theoretical maximum on the amount of segments that you want to introduce, and the amount of dimensions that you want to cut your revenue plan by. So it's, like I said, it's a balancing act between trying to keep it simple and straightforward and easy to understand, but also segment appropriately to drive ownership and accuracy in your forecast.
That closest to the pin reference. So maybe Nick is the Scotty Scheffler of FP&A, we could say here.
I don't know about that.
You talked about predictability, and we think about this crystal ball, right? That you're kind of looking at and into. And let's say we're already at mid-year 2025. So I feel like we'd be remiss if we didn't talk about AI one way or another. And so I'm curious what your thoughts are on this sort of evolution of AI in corporate finance and FP&A, and this now new introduction of agentic AI and AI agents to help the workflow. I'm really just curious, your input there and what you think and maybe what you foresee if you look into your crystal ball.
But I think the pace of change is undeniable. Lots of people smarter than me have said that, and I think at this point it's undeniable. I think everybody is using, or most people in a professional setting are probably using AI in their day-to-day workflows, 3 to 4x more than maybe they were a year ago. And I think that pace of change is even accelerating. When I think about myself and my day-to-day interactions with AI, even against 4 months ago, I'm probably up 2x in terms of the amount of time I'm interacting with AI on a daily basis. I think as it relates to finance specifically, I think maybe the rate of AI adoption across finance workflows has maybe lagged some other functions across a business. And I think maybe that's driven by a couple things. I think one, within finance, there's a really low error tolerance. And so obviously the responsibility of finance is producing numbers that tell a coherent story and an accurate representation of the facts of a business. And so, if you're using AI to run a marketing campaign, it might be okay if you get somebody's email address wrong, or you send, the wrong type of message to somebody. It's not okay within finance if you produce the wrong number, or if AI produces the wrong number or calculates something wrong. So I think that's maybe been, slowing the pace of AI adoption within finance. And then I think the other thing is auditability is very, and traceability is really important within the finance function. It's not necessarily enough to just get an answer or get a number. Most companies go through an annual audit every year. If you're producing a number, you want to know how and where it came from and how it was produced. And so I think we're getting there with some solutions where that auditability and traceability is increasing, but I think that's another thing that's slowed AI adoption. So I think those have been the headwinds to AI adoption. I think what's exciting is that I think there's no question that workflows will change. I think, most of our time as finance professionals has been spent in spreadsheets for our entire careers, and that's been like the one UI of financial analysis and a lot of what we do on a day-to-day basis, whether it's reporting, forecasting, planning, what have you. I think there's definitely an opportunity for new interfaces where, the amount of times where I've had a simple question and I've had to go pull a report, which doesn't seem like a lot, but if I have to interrupt my workflow to go, pull up a dashboard and try to find an answer, it'd be much easier if I could, have some sort of interface where I could just ask a question and get an answer back. And it does feel like we're getting closer to that. And I think, there's a lot of technology solutions out there, existing vendors that are focused on creating some of those use cases and workflows within their products. And so I think, there's definitely some early traction out there that I think is exciting. I guess, I don't know, it feels like we're still kind of in wait and see mode, but I think over the next 12 to 18, maybe 2 years, we'll see lots of change within the finance function, because I think it's ripe for AI disruption. There's a lot of things that we do on a day-to-day basis that can and should be done better by an AI from a workflow perspective. I mentioned error tolerance. I think finance as a category has probably tolerated human error or the opportunity for human error for too long. So I'm excited, for some of those solutions to come out, and I think it's an exciting time to try to disrupt your own workflows and question old assumptions for the way things have been done. So yeah, I think it's really exciting, and I guess we'll just have to see where it goes.
Well, Nick, it's been a pleasure getting a chance to talk to you and talking about, the value that FP&A can provide companies. So I really appreciate you hopping on and joining us on the show today.
Yeah, Matt, it was a blast. Thanks for having me, and hope to talk soon.
For more Finance Fireside Chats, be sure to subscribe to our channel and visit us at FutureViewSystems.com to learn more about our solutions.